Recognizes himself for 5 minutes. I'm Nick LaLota. I represent the Long Island district, the 1st District of New York. We're about a couple hours east of Manhattan. We're a suburban district with many mom-and-pop businesses. They are struggling under the high inflation, high interest rates, excessive regulations, and labor shortages, just to name a few. Members of this committee from both sides of the aisle agree that these challenges are real and persistent throughout the country. And with that in mind, it is troubling to me and other members on the committee that the Consumer Financial Protection Bureau is using resources at its disposal to create rules to add to these very real pressures instead of mitigating them. Hopefully at a future hearing, we can have a representative from the CFPB to explain to us the timeliness of this rule. Thankfully, you as today's witnesses have beyond a doubt demonstrated that these new regulations would have duplicative measures and would cost millions per year to comply with and would irreparably harm relationship banking. My first question is to you, Mr. White. Sir, thank you so much for being here. As you stated in your testimony, you have 130 employees across many locations. How difficult would it be for your business to create a firewall, as has been described today?
Anytime when you have a bank our size with our number of employees, any new regulation is hard to figure out how are we going to do this with the employees we have. And I'll explain what we do on HMDA because it's fairly similar to what will happen with 1071. Our loan processor enters the data. We then have 3 separate people review that data before we file it or report it. And we still have the random mistake after 3 levels of review. And so when you consider last year we did approximately 770 loans that would be subject to 1071, you're looking at HMDA on steroids basically in terms of the amount of manpower and time that it would take.
Thank you. And following up on that, you also illustrated problems with the scope of the data collection. For example, the 25 loan threshold is far too low, and the borrower gross annual revenue threshold is too high, meaning that the data collection requirements would apply to a majority of community banks. In your opinion, what should the threshold be?
ICBA is advocating for a $1 billion asset threshold. Banks below $1 billion would be exempt. If the CFPB or the government stays with a number of loans, we would support French Hill's bill, which has a 500 loan limit. 25 loans a year is so low, it's honestly a little bit offensive that that's considered an exemption.
Thank you so much. And Mr. Peters, in your testimony, you talked about the decline of community banks and the resulting consolidation, and I share these concerns, sir. How do you think small businesses like the ones in my district on Long Island and throughout the country will fare if they have fewer choices when it comes to lenders?
Well, I think we have the best financial system in the world, and I think part of that is having choices as businesses and consumers and competition. And I think in this case, if you're concerned about the privacy of the data, you may want to go to a larger lender where your data could be harder to find by the public. If I was denied the loan, I don't want my community to know that. So I think it does not play in favor of our small business clients and communities.
Thank you, Mr. Peters. And following up with that, you discussed that making application loan data public will be opposed by your clients for a variety of legitimate reasons. Do you think that this will make your clients less likely to apply for those loans?
I think in some cases it could push them to other lenders that won't follow those rules, such as I mentioned in my testimony with hard money lenders that fall under these thresholds and can ensure privacy of data. And that's something that's very important to my clients.
Thank you. And thank you for all the witnesses being here. I yield back the balance of my time.